Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremat, as well as Mobina Kapasi, who'll be joining us just shortly. While we wait for her, let's get a move on and get you the headlines of this morning. Beginning that, we've reclaimed 11,400 for just about. Tech stocks once again leading the surge. Metal and PSB indices are under pressure. The next big one today is the loan recast, and RBI has set debt recast rules and accepts the KNK-led Panel's recommendations broadly, but we'll be bringing you more on that later. We then have Mnc Stocks that are in focus. Yesterday we saw tremendous moves from AstraZeneca, Blue Dart, gaining most in 8 years. It'll be interesting to see if that can hold up today. Then Dr. Reddy's, a popular pharma stock in focus, announcing a launch of fulvestrant injection in the USA. It's quite a big market, we're given to understand, and it should help their revenue visibility considerably. Then moving forward to Bharat Dynamics, the promoter proposes to sell up to 1.83 crore equity shares on September 8th and 9th. The Ministry of Defence and the Government of India are the promoters of Bharat Dynamics Limited. So OFS from some PSUs coming up. And finally, is there possibly a tariff hike on the anvil? We'll soon know, because Vodafone, now known as V, says that revival is critical as tariffs are still low. So maybe a tariff hike in the offing, or maybe some other cost-cutting measures for them.
Well, those are the big headlines we are tracking for you all day today on ET Now. But for Buy Now, Sell Now, remember folks, every single day we are going to be having the BNSN quiz on how well you know the markets. Are you spotting the big trends on the street? You can participate on this in this quiz via Twitter. And yes, you will stay tuned to Buy Now, Sell Now to know who are the quiz champions. Today's quiz question, of course, is which company has the highest stock price CAGR over the last decade? Is it SRF, PI Industries, Aarti Industries, or UPL? We are talking about CAGR over the last decade. So get your thinking caps on and tweet to us. We will reveal who the champions are at 11:45 a.m.
Okay, as we do every day, let's bring you guys the BNSN stock cloud for this morning. And a couple of stocks in here for results, a couple for some policy changes which have come in. But let's begin. So we have InfoEdge heading the cloud this morning. That's on the back of its results yesterday. Definitely some pressure on revenues given the lockdown impact, but profitability is improved. And I think that result was quite well received by the street holistically. We then have a Mothersons Sumi that was talking to ET Now this morning on the big exclusive, and a lot happening there, possibly fundraising. We then have an Escorts as well, which is receiving some brokerage upgrades, but the stock was under a bit of pressure this morning. We then have Amber again from the Auto Pack talking about all that's happening there. We have Dr. Reddy's on the launch of an injectable in the USA that we just spoke about. I believe it's a $400 million market, so fairly large for them. Then we have banks collectively. Obviously, the loan recast by RBI was put out just yesterday. There's some ratios that need to be studied, and that will determine the eligibility for restructuring. So those are key to look out for today. Then we have Grasim as well because of all that's happening in Vodafone. We have Aurobindo as well because they've received an FDA clearance for one of their pharma products. Parag Milk on the back of not such a great set of numbers. And then Bharat Dynamics, like we just told you, government OFS coming up, 1.83 crore shares over the yesterday and then today. So that's the stock cloud for this morning. And Mobina, back to you.
Okay, well, on Buy Now, Sell Now, we also, of course, get you stock recommendations, whether you're a short-term trader or a more long-term investor. We get you a sense of the markets. And not to mention, we, of course, answer all your questions and queries. So let's introduce our guest for today. Kunal Bothra joins us on the technicals. And today on the fundamentals, we have with us Ashish Maheshwari of Blue Ocean Strategic Advisors. Morning, gentlemen. Kunal, over to you first. What are you observing in the equity markets in the way that we are moving currently? I mean, are we just simply a mirror of what the Dow is up to right now, or what do you think are the technicals at play currently?
So, good morning, Karunya. I believe that the markets are going through a consolidation. I think the Nifty and Bank Nifty are going to more of a range-bound action. The market internals are still a bit mixed, and which is why it becomes difficult for the indices whenever it moves up higher or whenever it moves up lower to try and find any kind of concrete trends. Now, yesterday, you saw the Nifty IT indices do pretty well. You had the you had the FMCG sector do pretty well for itself. Bank Nifty was the one which lagged behind, slightly, and there was correction in many of these other high beta spaces as well. Today, it's a slightly different tinge or the texture of the markets. You have few of the odd mid cap names which are doing pretty well, but there's no sector trend which is emerging. The Nifty IT index, of course, still maintains and continues from where it left off yesterday. But I think other than that, there are no decisive trends which are shaping up. Now, whenever you see such kind of a market internal, you generally expect that the index is going through a more of a range-bound action, and which is why you have to be very, very stock specific. So I think that's how a short-term trader should approach the market. If you're looking for trade on the indices, I think it's much more better to try and be more stock specific and let the index consolidate in a range for some more time.
Okay. All right. Well, we'll get some picks going as well in just a bit. But first up, let me also go across to Ashish. Ashish, that GDP number is out, but for a very long time we've been highlighting how there's this deep disconnect between economy and market. So if one has to sort of form an opinion of which way or which direction the equity markets move, is it really going to be the mid and the small caps that are finally going to come out and outperform? How should one essentially form an opinion?
Yeah, in my view, large caps are first one, which are going to do well. Mid cap and small cap companies are facing their own set of challenge in order to maintain the profitability. Because unless you have some niche products, you are going to face a lot of competition. And again, credit flows and debtor collection, etc., are also big challenge in that space. So I'll prefer to go with companies which are having some niche if I have to select any stock in mid cap and small cap. Otherwise, I'm very bullish on the large cap as such in market.
Let's get you then the high risk and the low risk ideas. Depending on your risk appetite, you could execute trends. Kunal, over to you first for both your high and low risk ideas.
So, well, the first one is more of a a low risk trade, and that's a buy on NIIT Limited. I think it's an interesting mid cap name because the stock has been very stable in terms of trends. I think for the last so many years, the stock was trading in a band of 85 to 105 approximately, and finally the stock has managed to show some sense of a breakout. So I believe this could be an interesting buy, from a short term as well as from a medium term play. NIIT Limited. So recommending a short-term target of close to 135, and stop loss could be kept at 119. The second would be a slightly high-risk idea, and that would be from the pharma pack. Now, it's not the traditional large-cap pharma name, but it's more of a mid-cap pharma stock, and Sun Pharma Advanced. That's the NSE code is Spark. I think it's a stock which I would recommend at current levels. It's showing signs of momentum coming back, or momentum breakout on the charts, swing breakout as well on the daily time frame, and I think that could probably result into some swift upside in the very near term, which is why I would place it in the high risk category. Buy with a target of almost 200, and stop loss could be kept at 180.
Okay, thanks for that, Ashish. Let's also get in your high and low risk ideas for this morning.
Idea is Ifb Industries. My view is those businesses which are facing retail customers are going to do well. And IFB, after losses in Q1, in Q2 onwards, we are going to see very good run up in their profitability as well as in the revenue. Because if you see the market trend, you are not getting dishwasher that easily. You are waiting for dishwashers as well as washing machine, etc. Because household support is not easily available, and people are shying to take help of households. Support still. So those appliances which are used at your home are going to be in good demand. And again, finance is also quite easily available to buy these consumer durables. So 560 levels, I like to recommend IFB Industries. And again, it is still 200 rupees away from 52-week high of almost 800, which it has touched earlier. So this is a risk-free. This is something like which I like to bet on at this point of time. As far as low-risk stock is concerned, I like to go with Tata Consumer Products. In my view, stock has already corrected by almost 10% from the peak of 590, and this are now available at 545. So this is again a company which is focused on B2C segment now with their brands now directly accessing consumers instead of B2B segment, which is going to be a game changer under new CEO. So this is a stock which we can buy with very small stop loss. In my view, you can expect in this year 750 kind of target in Tata Consumer.
Okay, great. Ashish, thanks for those picks. Let's get a move on with our queries for this morning. The first one we have is for the State Bank of India. And Samuel Fernandez of Mumbai has written to us. He's bought 1,000 shares of SBI at 170, so very good price. He's made some money also despite the correction. And now he's looking at things from a 1 to 2 year view. So Kunal, let's come to you first. You know, it was just a couple of weeks ago where those 300 rupee targets were coming in succession daily from CLSA, Goldman, and now the notes seem to have stopped and the stock also seems to have cooled off a bit. So that being said, Samuel has a long-term view on things. So what do you think? Can he maybe get an entry point closer to 170, or should he just go ahead and buy now if he wants to hold for a year or two?
You should look to buy now. And when you're looking at, so you have to look at two things. When you look to invest into a large cap name, first, foremost, you have to look at the bigger trends on the markets. Now, there could be some short-term, aberrations or short-term corrections. That's a part of a natural course of how the markets or the trend shape up. But it's a bigger trend expect to be on the upside. Then I believe that you should use the short-term aberrations and corrections as a good support zone. Now, for SBI specifically, even if you try and look at the short to medium-term charts, and I'm talking of from the April lows or from the May lows, with the stock added, and you try and join a very simple kind of a trend line support to indicate what is the demand zone or what is the zone of strong support for SBI. And I think at current levels, it comes very closer to 195 to 200 range on the short-term chart. So I would sense that maybe another 5-10 rupees lower from current levels, if the stock comes back to that 195-200 band, I think that could be a good enough band rather than waiting for 170 levels. And that should be a good enough band. We can look to start averaging or look to start buying SBI, and then of course waiting on looking at the market conditions, you can try and average it out lower, or maybe if the stock consolidates for some more time in that kind of a band. So I think don't wait for a major correction on SBI. You can start buying either immediately or maybe another 5 to 7 rupees lower from the current market price.
Okay, well, same question to you then. And, like Varun flagged off, we've had some marquee brokerages as well, talk about SBI and how, flag off sort of promise it holds in terms of stock price returns from here on. And, again, I guess Ashish, stocks like an SBI, L&T, ITC, unfortunately, the returns from these stocks have been a little low, but these are one of those coffee can portfolios. What would you advise, Samuel? He's bought it as well at a very attractive price, but it's a big figure.
But one thing I'd like to caution traders is to avoid PSU Bank if you are just buying any such a stock for trading, because the problem is they are the ones which move in the last in the rally, and they are the ones which fall first in any meltdown in the market. So until you are having a long-term view, I don't think so. PSU Bank is something like that you should play. But if investors having 1 to 2 year horizon, certainly it hold a potential to give 15 to 20% kind of upside. And SBI is again a classic example where quarter over quarter they are coming out with good set of numbers, but still market is not that much convinced how they are convinced for peer private sector banks. So 1 to 2 year time frame, my target will be 250 for SBI, and from here I also see very limited downside risk.
All right. Well, there you have that. As I rightly pointed out, these are the slow movers when the market is up, but will fall pretty, rapidly when the market is on its way down. So a bit of caution recommended on some of these stocks. Okay, we have our next query coming in from Ramesh Shah. He says, please suggest a pharma stock for a long-term perspective. Well, I understand his interest in the space, given the fact that we've seen a rapid rally come by in 2020. These stocks were, in the last 2 years, subdued, written off, especially by traders. But now there's interest once again in these counters thanks to the COVID-19 pandemic. Kunal, any pharma stock that's catching your eye? Ramesh is a long-term investor.
Investing, then I will advise that go with the leader, both in terms of the price performance as well as leader who did the stock which bottomed out much earlier than the sector bottomed out, and then the stock managed to have a strong weightage when the entire pharma rally started off. And I'm talking about specifically Dr. Reddy. I think that's a very, very interesting chart, because the stock actually bottomed out in 2018 mid somewhere, when the stock hit that 2,200 kind of lows, and from there on it's just not looked back. So the pharma index overall had bottomed out just 6 to 8 months earlier, but this stock actually bottomed out 1.5 year back. That itself tells you that this has been one of the leader stocks. Now the stock is already at a fresh lifetime high or 50-week high, but apparently if you look at the long-term charts, the stock has just broken at 5 years of consolidation. So the 2015 high for Dr. Reddy was around this 4,300, 4,340 mark. It went to low of 2,200 and then made a comeback to 4,400. So if you look at the entirety in the last 5 years, it's just recovered what it lost in the 2015 to 18 phase. And I believe that such a kind of recovery generally leads into a very sharp uptrend into the stock. So both on the leadership qualities as well as on the large cap front, the stability of price trends, and with the time horizon, the risk appetite which you have, I believe Dr. Reddy could be a good buy.
Okay, thanks for that, Kunal. Ashish, what about you? Which stock within the pharma pack is looking appealing right now?
Recommend Granules India Limited. In my view, this is a company which is a mini version of Aurobindo Pharma, because they are the ones at present deriving almost 50% of the revenue from US market, and next couple of years it will be up to 75% of their revenue will come from granules. Again, though stock is at 52-week high levels, but in my view it has long way to go, because from API to formulation, they are one of the fully integrated company. Again, last quarter numbers were pretty good. Almost sales went up by 25%, net profit went up by almost 34%. And in my view, this run rate is going to continue. Another thing is the promoters have reduced their pledge from 40% to almost 8% in last 1 year. And FIs have also increased their holding in the stock from 14% to almost 23%. So this is again a stock under continuous accumulation by some of the leading funds. So I like to recommend Granules India with a price target of approximately 600 rupees in 1 year.
Okay, thanks for that, Ashish. And what a run it has been for Granules. It's performed amazingly over the last 52 weeks, so maybe they're on to something bigger. With that, I hope your query was addressed. Ramesh, do heed the advice of our experts. I also think we're done with the query section for this morning, so a big thank you to you both, Kunal and Ashish, for joining us. Let's now switch gears a little bit. EM Guru Mark Mobius, market veteran Manish Gunwani, and Mark Faber shared their tips to build wealth. Let's listen in.
would ask them, do you like what you're doing now? Do you love what your work is? And if the answer is no, first thing I would tell them is change your profession. Because unless you love what you're doing, it'll be very difficult to become rich. Once you find a avocation where you're really very happy, chances are you will do very well and you'll become rich.
And if somebody is rich and wants to remain rich at a time when interest rates are zero by central banks, how can one remain rich or protect their purchasing power?
Again, it's getting hard assets, getting assets, and that means stocks, companies that have assets and have assets that are earning and adjusting to the inflation and to the devaluation of the currency. So that is the only way to remain rich. By the way, that's the reason why many of the big foundations, family offices, etc., come to us and to other fund managers looking for investments in stocks. Now, of course, some people also are in bonds, but I look at bonds as sort of a short-term palliative. The best investment are stocks. And of course, particularly now, with bond rates being so low, you're better off with stocks.
If you ask on a 10-year basis, the kind of stocks which will work are something which will ride the technology wave for sure, because it's very difficult to engineer top-line growth with an offline model at this point of time. So yes, while these tech stocks and the digital-oriented stocks are very expensive, they're done well, and they may go through a crash like 2000. But the point is that if you go back to that area, period, Google or some of these stronger names actually emerged through that crash. So yeah, I mean, clearly the big money from a 10-year basis, it's very difficult to make without some IPR or a network-centric business model. Unfortunately, in India, a lot of that action is happening in the private equity space, not in the listed space. But I'm sure we will get opportunities. The other way is, of course, I think some of these healthy secular growth industries like banking, general insurance, retailing, periods like this year, hopefully give you some chance to get in. And a lot of these businesses also some of the good businesses or good managements in these sectors should grow 15, 20, 25%. But yeah, if you're looking to make, 10x to 100x, I think it will have to be a bit of a technology-oriented play.
Well, I think if you really want to be rich, you have to work a lot, whatever that may be. Number two, instead of posting your picture on Facebook 3 times a day, I would go and learn something and study. Whether that study includes getting skills at being a good carpenter, electrician, or plumber. These are scarcity jobs in advanced societies, and these are very highly paid jobs if the person has the necessary skills. So whatever you do, you need to have high level of skills. If you are an economist, you have to be a good economist. If you are a computer technician, you have to be a good one. And I think you just raised an interesting question. If you want to be rich, I can tell you, if you want to be rich, money printing by the Fed and by the Reserve Bank of India isn't going to help you. That I guarantee you. The only thing that can help you is, as I said, hard and focused, disciplined work, consistent work, and consistent improvement in your knowledge and skills. That will make you maybe rich, not sure, but it gives you at least a better chance to be rich.
All right, well, that's of course some very interesting rich mantras coming in from the who's who and the experts of investing. On that note, we will take a very short break right here on the show. When we return, we will be talking about some stocks and news and stories in focus. Welcome back. You're watching Buy Now, Sell Now on ET Now. Just a reminder for all our viewers, it's the last 15 minutes to go for you guys to, put forward how well you know the markets if you're able to spot the big trends on the Lal Street. We have a D-Street trivia or a quiz going on every single day on our Twitter page. That's @Buy Now, Sell Now. Reminder, the question, of course, is which has been one of the best CAGR performers for the last decade. You can still tweet to us your answers and we will reveal the correct answer as well as the people who got the answer right at 11:45 a.m. All right, well, let's talk about some stocks in news then. And Bharat Dynamics is stock in focus. It's plunging in trade on the buzz that the government plans to pare its stake in the company. Avant the Buzz joins in with more.
Well, Bharat Dynamics is a stock in focus, in fact, under acute pressure in today's trading session on the back of the news that the government is looking to, in fact, pare their stake in the counter. What we understand is that the government is going to sell 15% stake through an offer for sale. This is on the 8th and 9th of September. Remember, the government owns about 87.75% stake in the company, and they're looking to offload close to 2.7 crore shares. The floor price for the OFS has been fixed at 330 rupees per share, which is a discount of nearly 14% to Monday's closing price of 384.5 rupees. The OFS includes 1.83 crore shares in a base offer and another 91 lakh shares in case of oversubscription. The retail investors can bid for the OFS on Wednesday, and a 15% offer of the offer of shares are reserved for the retail investors with a discount of 20 rupees. Do remember, just last month, the government sold about 15% stake in Hindustan Aeronautics for a sum of 5,000 crore rupees. But the HAL and Bharat Dynamics OFS are part of their overall divestment program, which has been slow to get off the block largely on account of the pandemic.
Okay, as part of another initiative we're doing at ET Now, what's the story, where we pick out select stocks that may be in focus for whatever reason and bring them to your attention. So today's candidate is Aegis Logistics. Not only has the run-up for this company been tremendous since the March lows, it's also showing a lot of promise. The management has managed to pay down debt while expanding capacity, and now we believe that the capacity should go up around 3 times from where it currently stands. Given that leverage is actually reduced, that's a very encouraging statement, and it shows you how much cash the business generates. Now, if you look at the 7,000 crore market cap and a 350 crore EBITDA, it may look expensive, but that's because there's a one-off ESOP which is currently being expensed to the P&L. So optically, your EBITDA is looking lower, but it should be more to the tune of around 500 crores plus. So if you factor that in, it's quite cheap. I haven't told you what Aegis does. They do LPG logistics, basically. So all port-based, every big port, Pipavav, Kandla, Haldia, Mumbai, Mangalore, they have a presence there, and they are able to get LPG to all their customers. Now, based on the most recent calls, the outlook for this business remains fairly robust, given that LPG isn't really produced much in India, and there aren't too many PSU players foraying into it as well. The revenue has grown tremendously over 10 years, from 300 crore to around 7,000 crore last year. So it's a major success story and something to keep your eyes on, and something at ET Now that we would like to bring to your attention as potentially a great long-term investment.
Okay, well, interesting one. Thanks, Varun, for that. It's Aegis Logistics, and if you want to catch more such stocks, you know where to tune in. It's ET Now. Moving on, the RBI has released a fine print of the KNK-led Panel recommendations on the resolution framework for COVID-19 related stress. The panel has recommended financial ratios for 26 sectors and, no prizes for guessing which these sectors are. Aviation, hotels, restaurants, tourism, and there's also auto manufacturing and logistics. The 5 key broad parameters include total outside liability upon adjusted tangible net worth, total debt upon EBITDA, current ratio, debt service coverage ratio, and the average debt service coverage ratio. The RBI has advised lenders to make their own assessment and refer to the 6th and 7th September circulars where the ratios don't apply. And on this topic, in fact, we had, big bankers react to the news. First up, Arijit Basu of SBI, and we sort of tried to understand if this recommendation and if this guideline will sort of further simplify the debt framework. Listen to him.
Every bank will have its own book and how strong that book is. So as you know, the Kamath Committee has identified 26 sectors for which they have given out specific financial ratios, and they have identified them. But at the same time, all those 26 sectors, the companies which each bank has, including SBI, may vary. So we have given an idea about our own position at the June quarterly results. And for us, the number of companies which are impacted or have been impacted or had taken moratorium during this period was not very large. But as things open up from 1st September onward, this will get invoked if there is a default. We will have to see which are the companies that come forward. We have also internally reached out to most of these companies and done an assessment. And we feel that it is, at this point in time, not a very, very large number. For accounts which are under stress or under difficulty, that would be common to all the banks. So normally the banks should be wise enough to coordinate. So as far as there is a provision of signing an ICA, and 75% of the lenders by amount and 60% in terms of number, RBI has already given, have to come on board. And typically what happens is, in most of the accounts, that would be the case. And those who don't want to participate, RBI has also given an indication that they can take a liquidation value and move on. But sometimes what happens is that the security structure and the terms and conditions of the loans given by different banks vary. Typically, that is when the problem starts. But hopefully this time, because it would be in the interest of everyone that the solution is found, that there will be consensus as to whether the resolution plan should be supported or not.
Okay. Coming next, we also spoke to Manishi Ray Chaudhary, who mentioned that private banks are preferable over PSUs. Let's listen in.
To some extent, the financials did play catch-up after the late March bottom. They did recover somewhere, close to 30 to 40%, in some cases even higher. But now I think the investors' attention is focused on the post-moratorium scenario. And at the end of August, the moratoriums have expired. And how would the different kind of borrowers react to this new scenario? How many of them would actually be able to repay? What would be the Supreme Court's final contention about interest payment on loans that were under moratorium? These are various issues that the investors are currently struggling with. And until and unless we have some degree of certainty, which unfortunately may not emerge right away, we would see this one step forward, 2 steps back kind of a movement in that sector. That said, there are certain banks which are clearly better placed in the Indian context than others. We still like the private sector banks, particularly those which are retail lending focused. And it's no surprise that their percentage of loans under moratorium are significantly lower than the public sector banks. So, our focus still remains on the private sector banks, on select insurance companies, and on select housing finance companies.
Okay, well, moving on, Tata Motors is already producing much beyond the pre-COVID levels and is looking for more, says Shailesh Chandra, the president of passenger vehicles with Tata Motors. In his first interview after taking over as president during the lockdown, Shailesh said that the company is not worried about the current market situation for finding a strategic partner, but says it's a step for the future capex requirements. Listen in.
Actually started from more emerging markets where the lockdown situation was not as, intense and grave as in the urban centers, right? And that's when you saw that demand actually started picking up much faster than what we were anticipating. And in May, we had an offtake for the industry at around 36,000, which went up to 115,000. And in June and then in July, it nearly touched 2 lakh. And last month, it was about 2.35 lakhs. So you have been seeing this growing very steeply every month. And so has been the retails also. On the back of the retails have been slightly more as compared to what we have seen in the wholesale. Now, there is definitely a pent-up effect what one sees, especially in the initial months. There was, heavy part which was pent-up demand. But there have been certain tailwinds, I would say, to the normal trends, which is a shift towards personal mobility, which is supporting this also, apart from the pent-up demand that we had. And also, one is seeing this more in the urban centers because this is where this phenomena is. So a trend which started, more biased towards rural demand has been now stabilizing at the right mix of rural-urban, if not more towards urban, I would say, last month, because the phenomena of this shift towards personal mobility is more an urban affair and less of a rural affair. And also, if you see the trend of SUVs, which are more urban SUVs gaining traction, which is now 30% of the total mix from 26% or 27% in the earlier times, clearly shows that in August there might have been certain bias towards urban. But as you possibly go forward, as the festive season comes, you'll see strong growth in both rural and urban. But I would say definitely till Diwali, we see this trend continuing and industry seeing growth on a back of a lower base, I would say, last year. Beyond that, we'll have to really see whether the pent-up demand, which is, taking the demand significantly more than what we were witnessing last year. This effect will be seen more beyond Diwali. It is speculative at this stage, I would say. But when the normal factors of the macroeconomics come into play, we'll have to see whether it sustains or not. So right now, I would say till Diwali, definitely we are seeing that this trend would continue very strong.
Okay, so seems that things are on the up and up at Tata Motors, and we're all optimistic of a strong recovery, not just for them, but for the auto industry holistically. Even Mothersons was hinting at that today. But coming back to something that's more specific to BNSN, our quiz which we put out. Now, if you look at the question, which company has the highest stock price CAGR over the last decade, the options all have a similarity. They're all chemicals companies, right? And those companies have really boomed in the recent past. So SRF done phenomenally well, PI Industries done phenomenally well, RT Industries done exceptionally well, UPL also needs no introduction. So Mubina, before we give out the answer, I wanted to ask you, do you have a take as to what the correct answer might be here?
Well, Varun, looking at these options, all of these are the companies that are right up your alley. You've been tracking all of these companies very, very closely. So I would reckon you'd actually have a better sense than me. But, when I looked at these answers, the one company that's, really stuck out was RT because, both the companies have really been great, RT Drugs and RT Industries. But of course, this is just my guess, Varun. I'd rather ask you as to which one, according to you, has been the best performer of the last decade and what the right answer is.
Right, Mabina. Well, you know what? You were almost there because RT was number 2, but PI Industries is the leader. They have the highest stock price, Kego. Let me tell you, between you and me, that RT Industries is just less than 1% off of PI Industries. So you have the right idea, but they're a strong number 2. Then in third place, we have SRF. And finally, in last place, we have a UPL. So let's congratulate our winners, Jay Shankar, whose Twitter handle is Jay Shan. He got it right. Also, someone with the Twitter handle of Groot, G-R-O-O-T. He got it right as well. So just 2 this morning indicates that it is a fairly tough question. I think we had a larger set of winners the last time we did this. But this is something that's going to happen daily now. So keep those minds sharp and keep studying your general knowledge about the various sectors in the markets, because we're going to be coming up with all kinds of innovative questions for you guys on a daily basis. But back to you, Mabina.
Close second for me, but yeah, it's PI Industries really. That's been one of the best performers on a CAGR basis of the last decade. For now, we will take a very short break right here on the show.
Welcome back to Buy Now, Sell Now. Very interesting interaction Mabina had on TMS. The moratorium or EMI repayment holiday is officially ended, but if you're still finding yourself in a tough spot financially, Raj Khosla, founder of My Money Mantra, caught up with Mabina yesterday and shared some options that might alleviate your situation. Let's listen in.
I would recommend restructuring or approaching your bank for restructuring as a last resort. In the first instance, try to collect as many funds that are available to you, either from family or friends or through possibly sale of some item, and remain current with your debts. Do not seek restructuring. If at all, the next step should be to consolidate your debt. Try to move, if there are some amounts that are payable, interest is accruing at say 30%, try to move it quickly down to a lower interest-bearing debt. As a last resort, then you could approach, you could look at the scheme that has been offered by your bank and seek to restructure your outstandings. Lastly, I would say, always be mindful of your credit score, because right now, if you'd avail of the moratorium, there's going to be no impact on your credit score. Even if you apply for a restructuring and then stick by the terms of that restructuring, even then there would not be any impact on your credit score. But check with the credit bureau or check with your bank that is indeed the case, that no, your score hasn't changed. But should you default on any of the commitments that you've made pursuant to any restructuring, then obviously the credit score will get impacted, and so will your ability to borrow in the future. So that's one really important item for individual borrowers to look out for.
Mr. Khosla, let's talk about something which you've mentioned, and that's called as balance transfer. How essentially would that aid our viewers who, like I mentioned, may have taken a moratorium, period is over, but they still need a loan holiday or an extension, by the time their next EMI comes due?
See, a transfer is really would be best advised. In case your loan was running on an MCLR rate as opposed to a repo-linked rate, in that case the difference could be as much as 100-150 beats. And then you could seek a balance transfer because you would have a lower rate of interest and therefore, you would get some relief. But, if you were already on a repo-linked rate, I don't think there would be too much relief because there would always be cost of transferring the loan to another bank or another lender. You're best advised to possibly, if you're in such a tight corner, to stay with the lender that you are and seek a restructured facility. That would be a best option as opposed to shifting to another place if you're already a repo rate ring.
Okay, so basically it's what we call as also refinancing. But when you are sort of the switch in terms of even the interest rate regime, but Mr. Khosla, I'm sure there will be certain charges involved, right? Because otherwise everyone would be doing this. Everybody would want to move, to a repo linked regime because obviously, right, in the last few months, we've seen this massive fall come by in the interest rates in the economy. We read about how SBI, BOB, all of them have now cut down their interest rates on loans significantly.
Quite a lot of the loans were already repo rate linked. They were linked to an external benchmark. I mean, for instance, Citibank links it to treasury bills. So, a lot of the lending was already linked to an external benchmark, whether repo or another one. There were some which are still on MCLR, and those were not falling as quickly, as the repo rate was falling. So that's why it made sense to transfer your loan with, to a lower rate of interest. But if you're already there, if you're already with, already getting the benefits of a low rate of interest, there's not much to gain from transferring from one lender to the other, especially in today's climate, where in any case it is so difficult for a lender to assess creditworthiness. So to expect that, you would move from one bank to the other, and you were already at a repo, or an external benchmark linked rate, and you would gain some item. I don't think there's much to be gained, but there will in any case be costs entailed with transferring from one lender to the other. So that's an added disadvantage.
Well, in case if you as well do want options post availing the moratorium, and now with your moratorium period ending, you can catch this entire interview on ET Now's YouTube page. But for now, we'll wrap it up on this episode of Buy Now, Sell Now. Thanks for watching.